Hey YouTube, this is Zach with Achilles Financial, and today I want to give you three different stocks that we can look at that all have the capability to trade options and all are trading under $10. So this is one of the ways that you can get introduced to options trading with very small exposure, and you can go out and mess around a little bit, again, all of which is capable of doing for under $1,000. The strategy that I'm going to be talking about today is going to be utilizing covered calls, which is when you are selling your right to 100 shares in terms of an options contract. One of the reasons why I'm going to be looking at these today is because there are a lot of people who are going out and blowing a lot of money on options. And I wanted to show that A, you don't have to have a lot of money to go out and buy options, and B, that options are inherently risky, and one of the safer ways that you can have exposure to them is by utilizing a smaller exposure and using covered calls, which is a for-profit strategy. So the first stock that I want to talk about today is Energy Transfer. And today I'm going to be using Robinhood to be looking and showcasing how you can use options trading as opposed to my normal preferred broker, which is TD Ameritrade, in particular their Think of Swim or Swim module. So if you are still using Robinhood and you would like to switch over, I promise you won't regret it. But again, if we're talking about Energy Transfer, this is a company that provides a lot of natural gas transportation services. And just to showcase what their website looks like, I have taken you here. So as you can see, they've just essentially, they build pipelines across the United States in particular. They are a smaller company, and you can see that, again, they're pretty big on just focusing on the stock price. But again, this is a company that, depending on the current administration, depending on policy, they could do really well, especially because natural gas is viewed as a safer and more efficient, or maybe not more efficient, but at least a safer and better environmental impact type of company than a normal oil-based company. So let's look at how we would utilize the stocks. So on Robinhood, what you're going to want to do is you will click this Trade ET options on the right-hand side of your screen. If you don't have this capability available, you will need to go into your account and then change the capabilities there. To enable options trading, just say that you have years of experience or whatever it'll ask you, and you should be good to go. As we go in here, and you'll see some of the differences between some of these stocks that have a little bit more volume than others that do not. What we're going to be doing is we're going to be selecting sell. And just for comparison purposes, I'm going to make sure that each one of these stocks has the same type of threshold, or at least the same end date. So instead of doing December 4th, what I'm going to be doing is changing this to December 18th, which is right at 2.5 weeks from now. So what we're going to be doing is selling a call option contract, and this is going to be a covered call. So the idea behind this is that I personally would have 100 shares of ET or Energy Transfer. Again, right now, this is going off the assumption that I can purchase that for $6.39. So what I'm going to be doing is selling the out-of-the-money option of $6.50 that you see here. So I am keeping it very close. The reason for that is because I have no real love for this company. If I wanted to sell farther out, then I'd have the capability to. But as you can see, there's not a lot of money in those options. So what I'm going to be doing is this $6.50 option. I would click on this one, and it says total credit. You'll notice that credit is important instead of a total debit, because this means that someone is paying me $25. So I would receive $25. I would receive that in my account. And then what I would do is hold this stock until December 18th. And depending on the price of the stock at December 18th would decide what happens next. If the stock is below $6.50, then nothing would happen. I would still have my shares. I would still have my $25. However, if the stock is above $6.50, then what would happen is I would sell those shares. Now, is that really a problem? Because the only way I lose on that trade is if the stock is over $6.75, because I got paid $25, which would represent 25 cents per share. So in actuality, this is still, that would lock in a 5.6% return on this investment over 2 weeks. So that's what I'm looking at doing here. Worst case scenario, I still have $25, which, although not the 5.6%, a 3% investment is still really, really good. The way that I got that is the way I got the 5.6% is I'm still taking into account the 11 cents per share that I'm getting from the difference between $6.39 and $6.50. So this is a company that you can try this strategy for. But if you say, Zach, what if I don't have $639? Then I know that there are a lot of you who like to trade the pot stocks. I personally am not a huge fan of them. However, we have the capability to do so with HEXO Corp. So HEXO Corp is a penny stock. I personally do not own any of their shares, not a huge fan of them, but this is a really easy way to showcase some of the movement that we can utilize. So what I'm going to do is click on Trade HEXO Options, and with the same exact strategy, I can purchase 100 shares of HEXO for $88. However, you see I then have the capability for that same December 18th to sell those shares for a 13 cent or a $13. So let's hit sell. We've then got the $13. So if the shares are going to go up, and this is just kind of due to the nature that this is a penny stock, I would actually get $13 and the difference between the 88 cents and that $1 price tag. So $25 gain if the stock is over $1 a share. However, again, you may not actually get that. However, off of that initial investment of $88, if it were to sell, I would actually get a whopping 28.4% return on that investment. However, due to the nature of this industry and the volatility associated with it, it can be a little bit more volatile. I do also want to highlight that there's a lot of different options, and even just by going out to January 15th, you can see that you can get some better options trades here at the 50 cent mark, which would basically be break even. So the industry is a little broken. It's still, again, this is why I don't like to trade options on stocks this low. However, what we are going to look at is one other company that I actually like, and it's got some exposure to the electric vehicle world, is IDEX. And this is a company that does a lot of commercialized EV, think tractors. And one of the reasons why I like them is because, again, they haven't seen the ballistic growth that you would come to expect from the entire industry, except until they had the big EV blow up earlier this month. But the stock was still only trading around $1 a share. So this is a high growth company that, again, the whole industry is experiencing this movement right here of kind of that launch of 340%. So by purchasing 100 shares of stock, which right now is trading at $2.85, so you could make that investment for $285. I then have the capability to go in here and with those same type of contracts, because of the volatility in the stock right now, I can actually get a contract of the $3, which would be a $15 gain, for $63. And that's a pretty big move, because if you say that the stock's going to move that much by December 18th, then what we're looking at is actually that $63 that you see right there, as well as the $15 that you would get as the difference between the two. And if you divide that by your total investment of $285, you're looking at a 27% return, which is not a small number for a 2-week investment. Again, the risk here is that the stock can go down and you do have to hold those shares, but you also have the capability to buy these back. So I really like these type of options plays because it gives you a lot of capabilities. Because again, you can invest with $285, and if you can get 25% return on your investment that quickly, it's pretty impressive. And that's something that you don't see very often. So that's one of the reasons why I like these stocks that have that volatility, have the capability to really move, as opposed to something like a Energy Transfer that we originally looked at. So check out these options plays, check out the companies, and if you have any additional questions, please drop those in the comments below. And if you found this content helpful, please leave a like and subscribe, because it really does help me in the long run. All of this really rounds out to say, if you have a small amount of money, you still can trade options, and you can still make these speculative investments. And if the stock goes from $2.85 to $4, yes, you'll miss out, but at the same time, you're going to be a lot safer having that guaranteed income over time, especially if some of these stocks do end up actually dropping back down to quote unquote normal prices. So all that being said, I appreciate all of you watching, and let me know if I can do anything else for you. Thanks. Talk to you all later.